Hey everybody, it's me, Gregory Mannarino. On Saturday, back again for my Look Ahead segment. I just want to say this. I started this 2 weeks ago, and I've heard from so many of you who really like it, so we'll keep it going for a while. Alright, so let's do this. When I started this 2 weeks ago, I explained what this is all about. Pretty much having a look at some charts, taking in a couple of other factors and try to get a perspective on what's coming down the pike here. So, what I'm going to need you to do, if you're watching this video anywhere else but on my website, traderschoice.net, again, I need you to go to my website, traderschoice.net. There is a link in the description of this video. We're going to look at some charts together and make some sense of this so we can freaking capitalize on it. It's that simple. So if you're not on my website, please click on that link right now. Go over there and finish watching this video there. If you are on my website, well, let's get started here. Okay, so this past Friday, just yesterday, markets didn't do too much. It was more or less a flat day. Now, let's put a couple of perspectives on what's happening here. In that video, I explained to you that there are two factors that we need to keep our eyes on, and this is going to dictate the direction of this market. It's that simple. The bond market and the dollar. What we need, literally, and I mean need, to keep this market suspended in this fake environment is a weak dollar, and we need them to keep propping up that bond market. I think these two factors are going to be rigged in such a way that we're going to get our wish. But, well, let's look at some charts and try to make some sense of it. Again, so hopefully you're on my website. Let's do this first. Let's look straight down here at my swing trading chart. There's ticker SPY in there. What do you notice looking at this chart here? Going back all the way to April, we are in an uptrend. It's in our face. Of course, you're going to get these, it's a random walk more or less with an upward drift. Now, what I don't want you to do is fall into this trap. And I went over this, I believe, in the last video. Now, if you look at this chart in front of you, the swing trading chart, some of you might look at this and say, hey, it looks to me like we're getting kind of ripe here and the market should pull back. Don't do that. Do not try to say the market should do this. That's going to get you into a lot of trouble. Understand this. And again, I covered this in the video I did last week, I believe. Are we getting a little over-owned here? Well, according to this chart, yeah. However, let's go down to the gauge underneath this and see what that says. Well, technical analysis of SPX, the S&P 500, says it's a strong buy. So what I'm trying to say here is in this state here, an over-owned state is bullish. It's bullish. Don't say, hey, the market's going to roll over here. Now let's go over to the chart next to it, the day trading chart, because you can play these off of each other. If you go to the day trading chart here, it looks to me like there may be, and I'm hoping for this, quite frankly, a little bit of a pullback on Monday, maybe Monday, Tuesday. I don't know. But this is how we're going to use this to our advantage. It's very simple. So looking at that day trading chart here, if you look at the indicator, it says Fisher 9, Fisher Transform. It's rolling over. It's rolling over a little bit here. So what this guy would like to see, and if you recall, I kind of wished for something like this last week and I got it. I want to see a little bit of a sell-off on Monday, even if it's in the early part of the day. I'd like to see the market burn off a little bit and then resume its trajectory higher. Now let's look at a couple of other things to see. We don't just want to look in one spot, because that's the wrong way to interpret any of this stuff. So let's look over here, right there, to the bond market chart. Look at that chart. I mean, They're in there. They're buying this stuff, they're making sure there's a rally here in the bond market and a simultaneous rally in the stock market. It makes no sense. This is not the way a real market should react. It should be risk on, risk off. Well, that's not this reality. What we need to do is see that trajectory maintained. Is it going to pull back a little bit? Yeah, sure. I'm expecting that to happen, but I want to see it maintain this upward trajectory. This will keep stocks propped up. You understand? Now let's go down and look at the dollar bullish ETF chart all the way down there. Okay. Look at that. It's also in pretty much a screaming uptrend. We do not want to see that. If you notice, there's some red candlesticks over there. We want to see that continue a little bit here, or at least not go much higher. We need the weak dollar. You understand? We need bonds being propped up for this entire thing to continue. So, I know this is getting kind of long-winded, but I think this is a really good lesson for all of us here, because what's this all about? Capitalizing on this market. We're not going to be fleeced. You will not be fleeced. I promise you, with this guy here. Not happening. So putting this whole thing together without changing any symbols, I mean, you know you can do that, right? Go back to my swing trading chart. Let's just, for fun, let's put in GLD. This is the ETF that tracks gold, paper gold. Oh, look how disgusting that is. I mean, you want to talk about a trend? It's a downward trend. And looking at this chart here, what do you see? Looking at this chart right here, today, July 14, 2018, does it look to you like gold is going to bounce higher anytime soon? No, doesn't look like that to me at all. Looks like if you look down again at the Fisher 9, Fisher Transform, it looks like it's going to fall. That's pretty sad, in my opinion here. But again, you know how I feel about this. Bet against the debt, become your own central bank. That's just the way to look at this. Use this as a buying opportunity. All right, so look. This is what I believe is going to happen. Let's summarize this. What I would like to see come Monday, Tuesday, probably more than likely Monday, I'd like to see this market burn off a little bit. Even if it's just in the early part of the day. Might not do that. Market might just continue higher here. You know, we're in earnings seasons now. We're going to start hearing a lot of companies reporting, and it doesn't matter what they say. It does not matter what they say. It matters what's going on here with the dollar and what's happening with the bond market. They can give forward guidance that looks like the rosiest picture on the face of the earth. Bottom line, top line, don't matter. None of it matters, in my opinion. It's just the rigging of the debt market, number one. Dollar being a part of the debt market as well. It's a unit of debt. You all know that. You know, just going real quick back to this, looking at this, the GLD that we just put in, this paper gold. Why would gold want to drop here? Maybe because the dollar is going to strengthen a little bit, which we do not want to see. You understand? But again, I think the trajectory for the market remains higher. So next week, I'm going to go out on a limb here again. I got the last 2 weeks perfect. Will also end higher. We'll see. We'll see how this plays out. It's going to be fun to address this at that time. So again, remember, hopefully, a little sell-off or a pullback on Monday, earlier in the week, Tuesday, something along those lines, and then a move up. And we're going to take advantage of that. We are going to do that. I'm looking so forward to it. With that said, have a great rest of your weekend, and you will not see me till Monday. Hope this made sense to you.